Welcome back to Magic Indicator Strategies channel. Today we will see a concept of how to see the market. It is not just a strategy but a way to understand the market and act accordingly to what we see in the market. We are going to see how we can trade order blocks, mitigation blocks and fair value gaps, which is one of the most complicated topics for beginners of smart money concept. And it is for this reason that I am going to show you the right indicators that will help you to understand these smart money concepts much better. Okay, now let's start with the first indicator. It is called ICT Fair Value Gap, created by LM et al. So we add it to our chart. We leave it by default, but in its configuration we can see that where it says box count, we can modify this number. This helps us to know the last gaps that the market has had. In this case it says 5, so it will show us the last 5 fair value gaps that the market has had. If we modify it to 10, it will show us the last 10 gaps, as I am showing you. This will depend on how you want to create your strategy, and how you like it. In this video we leave it on default because that's how it works well. Okay, so do you know what a fair value gap is? Fair value gaps are when impulse movements create an imbalance in price, leaving unfilled orders. They are popular because after one is created we often observe price return to fill these unfilled orders. As we can see in the image, the range of the gap is considered from the close of the previous candle to the close or start of the next candle, whichever is closer to the close of the previous candle. Okay, so let's see how we apply this indicator to get winning trades. We will see some examples and you will see that it is easy to trade with these indicators. To open a long trade, what we have to detect is a throwback. I leave an image for a few seconds for you to understand what a throwback is. Then both have to happen at the same time, the throwback and the gap. Then the candles must enter and exit the gap zone, as we see in the example. Once we have these conditions we can open a long trade, setting the stop loss lower than the gap with a take profit with a risk-reward ratio of 1.5. Okay, we saw that it took a little while but the trade was won. Here we see another example where we could take a long trade. Remember that the important thing is that the candle enters the gap and then exits in the direction of our favor. Okay, as we have seen, the candles did not respect this condition. So we skip this trade and wait for the market to develop further and get a better signal. Okay, here we see how a valid signal is given, so we take a long trade, set the stop loss below the gap with the take profit at 1.5 times the risk. Let's see how the trade unfolds. We see that it was a winning trade. Okay, here we see another valid signal, so we set the stop loss and take profit. We see that it was a winning trade again. But the interesting thing is that while this last trade was happening, we had more valid signals. Okay, now we will see short signals. Basically it's the same thing, only we are looking for the color of the gap to be red. First we have to see the gap and the pullback happen at the same time. I will leave you an image of the pullback so you can better understand this explanation. Okay, we see that in this signal the gap and pullback are happening at the same time. And we also see that the price entered the gap and left right there. So let's take a short trade. We set the stop loss above the gap, and the take profit also at 1.5 times the risk. We await the development of the trade. We clearly see that this trade is a winner. Now that you understand fair value gap, let's see the next indicator. The next indicator is called Order Block Finder. So we add it to the candlestick chart, but we're going to select the one created by Wogamlo. We will leave it in its default configuration since that way we can detect order blocks. So what does this mean? Order blocks are an area in trading where governments and big institutions would pile up their Forex orders to enter the market or exit existing positions. Okay, so how are we going to apply this indicator? The idea is similar to fair value gaps to take short trades. First we need to see the bearish order block signal plus a pullback. Then we have to wait for the price to return to that area, so the price enters the order block and then goes out in our favor. This must happen without the price leaving the order block in the opposite direction, but must remain in the order block and turn in our favor, as we see in the example. So we set the stop loss above the order block, and our take profit is also going to be 1.5 times the risk. Let's see how the operation develops. We see that it took a while for the trade to be a winner, but the result was positive. We see that within this trade there were more signals, but none were valid. Now we will see another example. Here's another example of taking a long trade. The first thing we have to see is the bullish order block plus a throwback. Once these conditions are met, we will take a long trade. We set the stop loss below the order block and our take profit 1.5 times the risk. We wait to see how the trade develops. We see that the trade was a winner, although it took a while, it was a positive result. Let's see another example. Here is one more example for a short trade. We see that first we have a pullback, and the candlestick enters the order block area but then leaves it. We then open a short trade, setting the stop loss and the take profit at 1.5 times the risk as we have been doing in previous trades. We wait for the development of the trade. It's incredible. And we see that he was a winner. Okay, I'm glad you understand so far how to take trades with fair value gaps and order blocks in a simple and effective way. Now we will see the best indicator to take trades with smart money concepts. So let's add this indicator called Smart Money Concepts created by LuxAlgo. This indicator includes many features relevant to SMCS, such as full internal control, and the labeling of the swinging market structure, in rupture in real time of the structure, that is labeled as BOS character change, that is tagged as chalk order blocks those, it can be bearish and bullish equal maximums and minimum, fair value detection of gaps, previous highs and lows and the discount zones. Okay, so to take trades long or short. We are going to enter the market when we see a BOS, which stands for breakup structure. This happens when the price breaks the nearest swing low or swing high, after having confirmed the trend for the second or third time. In this case we see that it is the second confirmation of a downtrend. The first confirmation shows us as CHO, so we take the trade when the candle ends below this BOS. We set our stop loss slightly higher than the most recent swing high and our take profit with a risk-reward ratio of 1.5. We wait for the operation to unfold. It took a while, but the result is in our favor, winning this trade. While we had the last trade, we had another valid signal to take a short trade. We see that it is the third confirmation that this indicator gives us. There is a breakout of the BOS, so we set our stop loss above our recent swing high and our take profit with a risk-reward ratio of 1.5 times the risk. We see that it was a winning trade. Now we will see some examples of trading long. Here we see a valid signal to take a long trade. First we see that it is the second confirmation of an uptrend. And just finished this candlestick with clear bullish strength above the BOS. So we take a long trade. For that we are going to set the stop loss a little below the most recent swing low. And the take profit with a risk-reward ratio of 1.5 times the risk. Clearly a winning trade. So let's look at an example of one more long trade. Here we see a clear example of entering a long trade. We see that it has broken out strongly on this large BOS. So with more desire we enter this trade. We set our stop loss at the most recent swing low and our take profit with a risk-reward ratio of 1.5 times. We see that it took a while, but the result was positive. Okay, I'm glad you already have a deep understanding of some of the seemingly complicated topics of smart money concepts. If you found this video useful for you, then leave a like and subscribe. See you in the next video.